This
Yes.
conference will now be recorded.
Hello everyone, hopefully everyone can hear me. We're doing a follow-up webinar on the cash flows that Philip asked for us to do, and he provided a list of questions that he wanted me to cover. So we'll be going over those lists, and then at the end I'll show you how to do the profit or personal financial statement and the sources and uses, and then also a break-even analysis, because those were some of the questions that the participants had in the last webinar. So now we'll be using the same cash flow spreadsheet that we completed in the last webinar. So with Sarah, so everything should look familiar and the same. I haven't changed anything. So one of the first questions was about payroll and how we arrive at the 30% or the percentage that we take out for payroll taxes. So with Sarah, we utilized 30%, and that was down here for a percentage. So on her gross wages, she would pay $115 in payroll expenses. And how we arrived at that number for payroll is an employee shares the cost with the employer. So Social Security is 6.2% times 2. So the employee and employer share, so it's total of 12.4%. Then Medicare is 1.45% times 2, again for the employee and employer, and that equals 2.9%. And then federal unemployment is 6% on the first 7,000 in wages that is paid to the employee during the calendar year. And then state unemployment varies depending on the bureau and what industry you're in, and it can range from 0.13% to 6.3%. And that is paid on the first 33,000 in wages paid to the employee during the calendar year. And so that total would be 21.43% through 27%. But then again, I use 30%, and where I get the difference would be another question under workers' compensation, and that varies by industry, and I usually add that percentage to the payroll expense, and that's how we arrive around 30%, give or take a few percentages. And again, the workers' compensation, it varies by industry, and the number one company that provides workers' compensation is the Montana State Fund. That will be up the rate. That rate will be analyzed yearly, so that rate could go up or down. There's also self-insured funds and then private carriers to pay off workers' compensation. So are there any questions on payroll and how we arrived at 30% of gross wages? Perfect. And then Philip wanted me to cover insurance and how we arrived at the insurance amount, and that will vary based on the industry and what business you're doing. And the only thing I can recommend is going to your local insurance agent and obtaining a quote based on the industry and the risk of your business may have. And if you had other questions on insurance, please let me know, because I really didn't know what Philip wanted us to cover there. But again, shop around for the best rate, and then you either pay it annually or you can pay it sub-annually or monthly, depending on what policy you take out. And one thing I wanted to show you under payroll is that through QuickBooks, there is a calculator that you can use based on to see how much an employee would be charged. So let's say Sarah pays her employee $8.50 an hour, and she is going to work 45 hours per month. So per week, that would be roughly 11 hours. And tax information is from Montana. So in just base pay, that employee is going to cost, for an annual expense, $5,600. And that's calculating some of the expenses and taxes that Montana pays. And if you did offer benefits or unemployment insurance, not unemployment, but retirement benefits and health and vision, you would go and put those down too as percentages. And this is through Intuit, and again, it's a total employee cost calculator to help you come up with your number that you can use on your projection spreadsheet for the total cost of that employee. And we're about $1,500 short. or $5,000 short, so it's pretty, or $500 short, so it's pretty accurate. Sorry about that. So then Philip also wanted to talk about cost of goods sold percentage versus actual cost. And cost of goods sold, I usually always calculate it to a percentage. So say you had a plate of food and you calculated that one plate of food was $5.25. And then you sold that plate of food for $14.99. And that's how I would arrive at a cost of goods percentage of 35% that I would then use on our spreadsheet. And that is if you don't have access to the industry standards, which provides you the percentage based on the industry. So you can break down what you're selling and then just divide it by your cost that you plan to sell it at to get your cost of goods percentage. Are there any questions on the cost of goods, actual versus percentage? You usually need the actuals to get the percentage, but then once you have the percentage, you can average all of your items you're selling, and then that percentage will still stay, average the price that you're selling them at, and then that percentage will stay the same. And that percentage then is always a percentage of your sales estimate. And last webinar, we had quite a few questions on payroll versus draw, and what is the difference. And so payroll versus draw, an owner of the business can take wages as either payroll, which is taxed as earned, or as an owner's draw, which is taxed at the end of the year. So on our spreadsheet, it's taking it out as owner's draw of $900, and we did not factor in employee taxes on her share for the $900, so then that's where we'd have to set aside, again, roughly 30% of her owner's draw. However, if she wanted to pay herself as an employee, she could be a salaried employee, and then she would come up under gross wages, and we could add that $900 to the $383, which then will automatically calculate and increase the amount of taxes that she has to pay in. It's either how the business owner wants to be paid, but a majority of the people who own small business usually take out an owner's draw. So they take out cash here and there and add it up at the end of the month and usually won't pay taxes on it till the end of the year. So are there any questions on payroll versus draw? Excellent. And then another question was draw versus profit. And profit, it is net income at the end of the year the business has made, and that will be taxed. It will be considered owner's draw and taxed at the individual rate. So you're still going to be paying that taxes on that net profit, but it's going to be considered as owner's draw. So at the end of this year, on our cash flow projection spreadsheet, it shows that she's going to be making roughly $20,000. So then she will have to pay an additional 30% taxes if it's not bumped up into another tax rate on that percentage, because that's going to be considered owner's draw. So are there any questions on draw versus profit? They're basically the same thing. The net profit converts into owner's draw at the end of the year. And then Philip had a question on completing other forms in the cash flow tab, so the break even. That's what we'll jump to really quickly. And a lot of businesses won't utilize a break even, but I encourage all the small businesses that are applying for the Indian Equity Fund grant and other businesses that I help to utilize the break even. Because the break even, some key takeaways, it tells you how much of an investment you must reach to recover your initial outlay or your initial cash injection. So if you're going to make $20,000 and you're spending that much in the 1 year, how much sales do you need to recoup that? And it is also considered a margin of safety measure, and a break-even analysis is used broadly from stock and option trading to corporate budgeting for various projects. So it shows you how much you can spend and what you need to stay in line with your budget. So on the spreadsheet we use for all the NABA applicants to fill out, there's a tab, break-even tab, and the break-even tab will create formulas to feed right off the monthly cash flow projection worksheet. So if the monthly cash flow projection worksheet changes, the break-even will also change automatically. So cost of goods sold, it's asking us what our percentage is. So we'll go over to the tab 1, the 1 year monthly cash flow. And for this exercise, we used 40%. So we'll link it and we'll click cost of goods sold 40%. Then it's going to want to know what our salaries, including payroll. So we'll create a formula and we'll go back to monthly cash flow statements. And we want to use yearly salary plus taxes. So hold on. So I'll go over cash and then I'll select wages plus salary and hit enter. So our total is $3,978. Supplies, we'll again link supplies to our monthly cash flow projection worksheet. And then repairs and maintenance will do the same.
I can't even see. It's a webinar, so I can't even see what he's doing.
Say it again.
Oh, I'm sorry. This is Charlene. I was just kind of bummed out that I can't see I'm on the phone, but I can't see your slides, unfortunately.
And we are going to, this is being recorded, so it will be on the website also.
Okay, great.
So, and I'll just go ahead and finish these. The card delivery, so go to Cashflow 1 to get your total travel. And accounting and legal. And that is $280 for the year. We don't have rent. Telephone expense is $800. And then utilities. $3,276. And then we have insurance. So we'll go and find out how much we pay for our insurance, which is $720. And then we do have miscellaneous expenses for this exercise, so we'll link miscellaneous to from our cash flow projection, which is $400. And then we don't want to leave out owner's draw. So we'll go and link our total owner's draw for the year. So that's completing our fixed costs, and those costs really won't change much per month. The only thing that may change is salaries. And again, up under variable costs or cost of goods sold, for this exercise includes inventory, raw materials, and direct labor. And most of the time that it will. Sometimes you want to separate those to get your actual cost of goods sold, but for this exercise, we're going to just include it in the 40%. So then our fixed costs add up to $24,893, and our variable costs are 40%. So not working correctly. Give me a second. It should equal 4,088. And I did try this earlier, and there is one mistake in the variable cost link, is when it's adding up the 40% up here, it doesn't carry down correctly. So we will correct that on the worksheets. But so our break-even sales level for $24,000 for fixed costs that we know are going to have each month, we have to sell $41,488 to break even. And then after we sell that, we start making a profit. So when we own our food trailer, we know we have to sell $41,000 a month in food to cover overhead and all of our inventory and cost of goods sold. Are there any questions on the break-even analysis? Perfect. So then another question was the cash flow gap, how to fill it. And if you're going to either have a cash flow gap running your business, you're short on money, you'll either have to look at cutting expenses or raising your prices. And if you're looking for a cash flow gap on, say the food trailer was $20,000 and you get the $14,000 ending equity fund, you would want to then either look at a microloan, the collateral support program through the state, or any other family or friends that have financing to fill that gap. And there's ways to get creative, but there's two different gaps that we're talking about, which is the cash flow gap, again, that's raising prices, decrease expenses, and then the financial gap, which is either taking out a small microloan or additional funding from area, family, and friends. Any questions on the cash flow gap? And then, So we figured out cost of goods sold, the actual cost, and we converted it to a percentage. But if you do have access to RMA data, you can utilize that resource and it will spit out the percentage for us. So Philip wanted me to show you what the SBDCs use. And again, if you need us to pull a report, just send me a quick email and I can pull the report for you quickly. It takes us a few seconds. So I'm going to demonstrate ProfitSense. And ProfitSense is a program that the SBDCs do have access to, and it pulls data from all over the United States. And again, your cost of goods sold percentage is going to base on your industry, so your NAICS code. So this, we used a mobile food truck. So I just searched food truck, and it's going to say mobile food services, and then the NAICS code for this is 722330, and every industry does have a unique NAICS code. And I'm going to say industry data. I want no filter per state, but I'm going to do all sales range just to get a more accurate picture. Then I'll click Run Report. Then this is the report that I would be sending you if you want industry standard pulled, and it goes over your financial data and ratios. So if you wanted to calculate the ratios for your NABA applicant that you're helping with this application with, you can go and compare these two because they should be in line. So the quick current ratio, inventory shows how long your inventory should turn over for a mobile food truck. But then again, sales is common sizing the industry data, and everything is based on the total sales of your cash flow projections. And right here, all years for a mobile food truck, the cost of goods sold is roughly 39.99% or 40%. And that is where I pulled our 40% for this exercise. And again, if you need the reports, just go ahead and send me a quick email and I can send you over the report. And there's a lot of other useful information in this report also. It shows you what your accounts receivable usually are, and since this is a cash-based business, they're relatively small. It shows you what your inventory percentage should be. Accounts payable, long-term liabilities, and this is just average all over the United States. And it shows there's 480 businesses that they pulled the data from to get these ratios. Are there any questions with ProfitSense and RMA data? Perfect. So I'm going to go back to our cash flow projection worksheet. And one of the requirements for the NABA applicants is to have a sources and uses funds page and a personal and financial statement. And they are both tabs that are included on the cash flow projection worksheets. So I'll go over to the sources and uses funds. And it's a simple sheet. This will take you a few minutes to fill out. And for this exercise, they're shooting for a $14,000 grant to buy the trailer and buy $4,000 in food inventory. Again, that was on our previous exercise. She planned supplies for $14,000 to cover the trailer and food. So investment by cash by owner, you can either rename this, or basically it's not by owner, it's going to be through the grant. So you could put in $14,000 here. That's what you're applying for. And if they're trying to seek additional money to fulfill a gap, they would go ahead and put in the additional funding under bank loan to business. So say $6,000 if they needed $20,000. But again, she's going to buy the food trailer, so that's considered, it could be either vehicles or equipment. I'll put it under equipment for $10,000, and then food inventory for $4,000, and that takes care of the sources and use funds. And again, your sources need to match your uses. So total use of funds, $14,000, total source of funds, $14,000. And again, this is going to vary based on what the applicant is going to use the money for. And if they only need $8,000, again, the grant or equity cash investment would be $8,000 putting in. Are there any questions on the sources and uses of funds? Then the other required document for the grant application is the personal financial statement. And again, this is included on the workbook, and it's a tab on the bottom. And for Sarah, it's we would put in today's date, where it's going to pull from the pro forma balance sheet, but 7-24-19. which is not working. So we can go up and we can always change it to date to get the current date. And so we're going to cover the assets first. And what I like about this tab is it's going to automatically have our total assets equal our total liabilities and net worth. However, if applicants are filling this out by hand, you have to keep in mind that total assets need to equal total liabilities and net worth. So we're going to say Sarah has $300 cash on hand, either in a bank or just cash at home. And that's all the current assets she has. So she doesn't have any market securities or stocks. She doesn't have a cash value of life insurance. She isn't receiving any money from anyone who owes her, and she doesn't have any accounts receivable outstanding. She doesn't have a house. She rents a house, but we don't put that here because she's not purchasing or she doesn't have a mortgage. She does have personal property right now, which is going to be some of our current restaurant equipment for the trailer, and that equals $3,000. So we're going to put that in personal property. She again isn't receiving any money from anyone. She doesn't have any investment in the business or other investments. However, she does have a car or a truck that she can use to pull the trailer, and that value is $8,000. Okay, so again, she has total fixed assets of $11,000 and total current assets of $300 for a total of $11,300. And she doesn't pay any real estate mortgages, so her installment amount. She has her car payment, so we're going to put that under other liabilities, and it is current because it's going to be paid off within 5 years or within a year. Because she only owes $3,000 on the car. And again, it will be paid off within a year. If it was going to be paid off greater than a year, technically you could put it under long-term liabilities because it's going to take longer than a year to pay that off. So her total current liabilities are $3,000. Again, she doesn't have any long-term liabilities. So her total liabilities are $3,000, and then that makes a net worth of $8,300. So virtually, you're taking the total assets minus your total liabilities, and that includes either short-term and long-term to get your net worth of $8,300. And again, like I said, if you're doing it by hand, your total assets need to match your total liabilities and net worth. So that takes care of the personal and financial statement. And again, the personal and financial statement and the source and uses are required documents for the application. Are there any questions on the personal and financial statement? And most of the time, they can be very simple. Some, if they have a lot of assets or liabilities, are a lot more detail. But for this exercise, it's a very simple personal and financial statement. And last, Phil wanted me to go over the SBDC website example. So we do monthly webinars, and we get guest speakers in, the SBDC network does, and they are out there for anyone to view. And we will be providing you with the link at a later time. So the Small Business Development Center networks, previous class recordings. So one of the good ones are Basic Accounting for Successful Entrepreneurs. And you can go click here for the PowerPoint presentation, or click for the to watch the presentation, which is a live recording. And another one that I like to do with people looking at starting a business is the pre-business webinar. And that's if you have an idea and what it would take to make that idea flourish, would be underneath the webinar for a pre-business webinar. And as you can see, there are quite a few webinars that we've done. Again, they're on the SBDC webpage, which we will be sending out the link. And we're posting it on the NABA website also. And that concludes my cash flow in-depth webinar today. I open it up for questions. So do any of you have questions?
Joe, this is Charlene. I'm going to do the recorded session. Do you know when that will be posted?
Billy, do you have any idea when that will be posted online?
Probably by
Okay.
And I'll
Kelly
also
has
send out the
questions.
little typed up scenario that I went over today with the questions that we had from last session. So you can see that too and see what I'm talking about also. And that will be posted on the website also.
Okay, thank you.
Yep. Janet, do you have any questions?
Not at this time. Thank you, though.
Okay. And feel free, if you have questions, email me or give me a quick call. Like I said, I can pull that RMA data, or any SBDCs can. And you saw how quick it was for me to pull that report. It virtually took 3 minutes. And again, there's reports for any industry out there. All you need is the NAICS code, and I can either search or help you find the NAICS code. How about you, Mark? Do you have any questions? So you're on mute. Well, that's all I have, Billy. So, if there aren't any other questions, thank you for attending. And I know we're a month in for applications, and it's going to get busier.
All right. Well, thank you so much, Joe.
Yes,
Perfect.
thank you.
All right. So I'm going to just hang up, but thanks again.
All right.